And for someone like myself that covered .com bubble, 90s, covered, you're talking about the average company was trading at 30 times revenues, 100 times earnings. So every time someone compares, like, oh, Cisco 99, you know, go to your Christmas dinner, like the uncle, whatever. It's like, oh, look at Cisco 99, .com, look at Nvidia. I'm like, yeah, but here's the difference. Was there $2 trillion of AI CapEx? Who's actually spending it? It's tech companies, $1.2 trillion of cash, and they generate $300 billion of cash a year. This isn't a startup funded late 90, as someone went through it.
Dan Ives, a tech analyst, emphasizes that Nvidia's unique position in the AI market makes it a strong long-term investment, despite short-term market volatility. He argues that, unlike past tech bubbles, Nvidia is cash-rich and poised for growth due to increasing demand for GPUs. Ives stresses that stock fluctuations are often noise, and that the real value lies in a long-term perspective on AI innovation. He also highlights the current market volatility, acknowledging concerns over inflation and interest rates, but believes the Federal Reserve is unlikely to hike rates significantly. Ives remains confident that the fundamentals of AI-driven companies like Nvidia are solid, despite temporary market reactions.
I think that is a historical view, not recognizing that we're in a fourth industrial revolution, and there's only one company in the world that has those chips. Like, so when it comes down to it, I could argue for a stock that could trade at 30 times earnings, if you start to get to a point where they're doing $5.50, $6 earnings, 180 to 200, when you start to look at out year, that's not egregious.
So did Goolsbee quell fears of a rate hike next year? Because that was sort of entering the conversation. Torsten Slok over at Apollo mentioned that in a research report on Wednesday. But the data today, plus Goolsbee's comments, does that sort of take that off the table in your view?
For a little while, right? Until we get data that, right, exactly. I mean, so when I looked early this morning, the handles were maybe down 50 or so. And then after that PCE number came in, cooler, that was down about 24. And I don't know what the rest of it was as the day went on. Maybe it was those interviews. That could definitely be it, because those were very bullish. But I think also some progress on the debt ceiling, that helped as well. And as well as the magnitude of yesterday, just kind of that sell-off was getting a little bit sloppy. So I feel a little bit better. It's nice to see that CPE number come in, or PCE number come in a little bit better, but I still think the trend is toward inflation and not a lot of cuts.
Right.
Yeah, I look, if the numbers bear out what the market really how they reacted to the PCE. You went from you basically rallied almost 260 basis points from 9:50 a.m. until the markets then peaked up, and then weakened just small off to the end of the day. But that translated into a major reversal over where we saw futures. So you looked at your screens in the morning before the markets open, and you said, wow, this is kind of sloppy, and we're probably going to go into the weekend, and people are now reassessing their view of the Fed. But Karen, I think you're right. I mean, sloppy in terms of how yesterday traded, or how the couple days have traded, really since those Powell comments. I think that has as much to do with anything. I think markets are jittery. You look at the 5-day on the S&P, it's we're down 3%. I mean, it's been, even with this move today, it's been a rough period after such an extraordinary period for equities, where the assumption was that inflation was your friend. We had a number of other prints going into the Fed meeting that had you believe that while inflation isn't out of the picture and disinflation is certainly a thing of yesterday, that the Fed is not going to be hiking. Having said that, that is the biggest risk for 2025 at this point. And it's not that the Fed will hike, it's that the perception of the Fed will change.
Yeah, I agree with that. I think the important thing is they're not going to be hiking. So whether they're cutting by twice or 4 times, not really the issue. The issue is, do they hike? But Powell, the day of the meeting, said that rates are meaningfully restrictive.
Right.
So he agrees with Goolsbee. He agrees with Williams. I think that, and he also doesn't want unemployment to tick up. So you do have the Powell put. Like, that's the way I saw it. I thought the markets totally overreacted to the commentary. I get it. He was a lot more hawkish than the market wanted him to be. I don't think the narrative has changed. Economy does worse, he's there. He'll cut more aggressively. And he's got plenty of tools, or plenty of time, and plenty of basis points to actually cut. I think the market got it wrong, but the market always overreacts.
I mean, there is still the sort of the conundrum, the squaring the circle that needs to be done between raising your inflation forecast and taking down the number of rate cuts. And that's still, even with the Goolsbee comments, Mike, that puzzle still remains.
Yeah, I think that's definitely true. I think what Karen was probably also referring to is that, a lot of the secular pressures that are inflationary, it's not like those things are just simply going to go away. We are at relatively full employment. So, of course, labor costs are something that we still obviously have to keep an eye on. I mean, to me, though, I think the important thing just in terms of what Tim was saying, which is that the market is clearly jittery, that bad news was really greeted with a very severe knee-jerk reaction. I mean, dropping 300 basis points in the S&P over the course of 2 hours sort of speaks to the fact that people might be a little concerned about the valuations.
Right. Yeah, and I think it's really interesting because even if we think about Optimus, that's going to need GPUs. And if we talk about a million bots, I mean, it seems like the demand for their product is insatiable, and it's not slowing if we're going to come up with GPT-7 one day.
But it's not. But that's in the point. It's people not understanding. Just like we talk about Palantir, it's not understanding Jensen, who he is individually, and the culture. See, people, they don't understand the culture of that company. Is they don't sit there and be like, oh, look where we are today. Options. I could get a crazy car. They view things like we gotta continue to innovate. And that's the difference between them and call a pseudo government agency, Intel, right? Like when you look at Intel, it's exactly the shame that happened to Intel that essentially became almost a beltway regulatory agency.
In the context of Nvidia's stock movement, we've obviously seen it go through a lot of ups and downs. I'm assuming a lot of that is noise to you because if you believe GPUs are inevitable and they have a monopoly, the stock could be further from.
It's noise. And I hate, again, you say noise and then someone come out like, noise, you loved it at 140, now it's 130. I'm like, like, what do you want? Like, the point is, that's like the sports fan, like watching a game like second quarter being like, oh, like, it's just like, this is a long game.
Yeah.
Like, my view is it's a long game. The only time that I get negative, if something structurally changes in a name, then that's, you have to like look at the thesis. But when you look at Nvidia, when the checks continue to be 15-to-1 demand and supply, and you look, we're only at 4% enterprise have gone down the AI path, and where numbers ultimately go. I'm not saying you don't have knee-jerk tariff worries, stocks down, people downgrade. But at the end of the day, my view is like, this is a long game that we're playing here in terms of where, but it comes down to like, look, man, I could give you examples like NASDAQ's 5,000.
Yeah.
And you're telling people like, and remember this, dude, I made plenty of bad calls. I'm sure, people will be like, oh, what about this call? But I remember like NASDAQ 5,000, like, bull market, 2010, 2011. Oh, what about TARP, this, Fed, 2012. Oh, Europe, debt, Greek debt crisis, it's over. Oh, look at the Fed deficit. Dude, it's not sustainable. Here's the deal. I get it. But it's just like when we talk about with like Black Swan event, Tokyo, when I was there for Tokyo Black Monday, just happens I was there. This is it. Currency trade done. It's like, has anything structurally changed? Yes or no? The money on the sidelines, 6-7 trillion. Many institutional investors are still very not well positioned. You're gonna have volatility, but it's like when I look at things like yesterday and Powell, and like you go from 3 or 4 cuts to 2. Here's the question: are we still cutting? Yes. Are we hiking? No. Are we in a cycle where like we're cutting 100 bips, 125 next like 12, 18, 20, 24 months? Yes. Soft landing? Yes. So AI revolution? Yeah. Trump coming in, deregulatory? Yeah. That's why I'm just not someone that sits there like tomorrow night like, oh, is the Fed? Oh my, dude, the government's going to shut down. Like, oh, I'm here. I'm like looking on Kalshi to see like what the betting odds are. It's just like, that's the stuff. Dude, those are like the demon type things that mess with the thesis.
Right.
Dan Ives, a tech analyst, is bullish on Nvidia's long-term prospects, citing its dominance in the GPU market and critical role in the AI revolution. He views short-term stock fluctuations as noise, emphasizing Nvidia's strong cash reserves and consistent demand for its products, particularly in AI-driven applications like GPT and autonomous bot. Despite concerns about inflation and interest rates, Ives remains confident, believing that the Federal Reserve will focus on preventing unemployment rather than aggressively hiking rate. He sees Nvidia's position in the growing AI sector as a major factor driving its future success. How will Nvidia continue to leverage AI technology for growth? What effect could future Federal Reserve policies have on Nvidia's stock?